Thank you, Aniket. Thank you, Professor Patnaik and Rohan. Excellent presentations, and I must say they were very complimentary. This is an area where the scale of the problem is just growing. The investment in infrastructure is growing. The private sector is participating. The risks are increasing. And the kind of solutions that come from one particular perspective is certainly not adequate. Insurance has been there for hundreds of years, but insurance also has its limitations. And what you said, I think, makes most sense in the sense that some of the solutions that work, they could really be accelerated, they could really be improved. Professor Patnaik referred to the non-viability of insurance in the context of Koshi floods, which are very, very frequent. But in the context of Koshi, so many resilience solutions are available. Living with the river, improving the floodplain management. I think some of those resilience measures could definitely be introduced, and that's part of the risk management. It's both a combination. It's also a blended solution, finance, non-finance, structural, non-structural. So I'm so glad these diverse, these complementary perspectives have emerged in the course of the discussion. Now I would invite 6 eminent discussants, to speak. I would request them to be very brief. We have very limited time. Just 20 minutes for the entire session to end. So I would request each of you, I will read your names and maybe you speak for 2 minutes. We start with Mariela Flores, Ministry of Economy and Finance, Peru. Is she here? Yeah. And I will just recognize all the 6 and then you can take your turns. And Dr. Joseph Lightman, Joe, you are there. George Thomas, then Michael Mullan, Satish Raju, Michael Mullan and Satish, you are okay. And finally, Sabine Basnayak. So, so please speak for 2-3 minutes each, and then we will open the session for questions and answers. Thank you.
Good afternoon, everybody. I speak about my country, Peru. In Peru, we have the National Disaster Risk Management System, SINAGER in Spanish, since 2011. This system has some instruments. One of that is the financial strategy. It's in charge the Ministry of Economy and Finance. In 2016, the ministry presented the document named A Comprehensive Strategy for Financial Protection Against Disaster. That was elaborated with the technical assistant, the World Bank. In this document, we present 6 main lines. One of that is that identify, quantify, and assess the fiscal risk of disaster associated with natural hazard. Other is establish guidelines to the use the available funds to respond to major disaster, promote the development of a domestic catastrophe insurance market, coordinate and promote the operational continuity business. 2 more is related exclusive for the financial. Formulate a component for developing and implementing tools for risk retention, and transfers. In this case, we have some instrument to retain. For example, we have contingent liabilities. It is about $800 million, exclusive for the disaster risk. More $2,500 million is shared with disaster risk and financial risk. We have a financial stabilization fund. It is about for $5,000 million. After that, the last year, we can, in the framework of the Pacific Alliance, we signature insurance contract for a cat bond in earthquake coverage for about $200 million. It was the first experience for my country in this instrument. The last component is to promote the assessment, prevention, and reduction of disaster risk. In this case, my country in the 2010, we create the program budget 6A. It's exclusive for the program for risk reduction. After that, we have another laws about the disaster risk management that has been incorporated into design, formulation, and execution of public investment projects. This is my experience for my country.
Thank you. This is an excellent example of risk management supported by public funds, so, and a very wide array of public funds, so it's really impressive. Joe Lightman.
Thanks, Krishna. I feel bad with my back to the audience and to you guys too. So I'll stand up here if that's okay. And in my 3 minutes, I'd like to make 3 points. The first is, as the World Bank, what do we see as the business case for investing in resilient infrastructure and resilience more broadly? Secondly, what do we do about making our investments resilient? And third, what do we do about innovation? And I think the third is going to be something important going forward. The business case. Why do we invest in resilience? It's because the lack of resilience threatens our twin goals of alleviating extreme poverty and promoting shared prosperity. If we look at the $500 billion of welfare losses every year from disasters and the up to 26 million people who are pushed into poverty because of disasters every year, then we see we're moving in the wrong direction for an organization like the World Bank. So that's the business case for us. And it's very similar to what Rowan said for the insurance industry. Second, in terms of investment, we do several things. First of all, we screen our entire investment portfolio for climate and disaster risk. So we're trying to, at a minimum, do no harm. On the positive side, we're putting in an average of $5 billion a year into disaster risk management. And those investments are about 3/4 up front, looking at how do we reduce risk, how do we improve preparedness and promote prevention, and about 1/4 of that money is for post-disaster reconstruction. And then we try and work on the issue that Aniket was mentioning, the lack of bankable projects. And a good example of this is our city resilience program, where we work with now about 50 cities around the world to help them put together a portfolio of bankable projects, work on their creditworthiness, and then take them to a Shark Tank where they're confronting individual investors, capital firms, institutional investors, banks, and venture capitals. So they have a chance to reality test their proposals and hopefully cut some deals in the process. Finally, on the innovation side, I think one of the roles that we play that I didn't recognize fully until I started talking to people in the banking sector is that we're able to take risks that the banking sector or the insurance industry isn't able to take. We can pay for some experimentation. So we've done this, for example, with issuing green bonds for climate mitigation and adaptation. We pioneered the first green bond 10 years ago, and now there's a robust market for these bonds. The same thing with catastrophe or CAT bonds, and we have someone here from Mexico who can speak about how those work. Secondly, we've invested heavily in the risk-taking of the parametric insurance industry by helping to create the funds for the Caribbean and now Central America, for the Pacific Islands, and for Southeast Asia. So this is what Professor Patnaik was talking about in terms of risk transfer, especially for smaller countries that may not be able to take the risk on for themselves. So that's just a brief comment of what we're trying to do. We do a lot more, but you only gave me 3 minutes.
Thank you. Thank you, Joe. Thanks. Joe Thomas. You can come.
Yeah.
You can also come here.
Yeah, friends, good evening. Thank you for the opportunity. I would limit my discussions to insurance. And as the previous speaker said, there's a boy ready to get married, and there's a girl over there who is also willing to be married. There is the government which is bleeding because of disasters, and there are insurers whose business is taking risk. So the risk is there, but then where is the disconnect happening? First of all, the insurers need to understand they should be able to evaluate, assess how much of risk is there, for which we don't have proper mechanisms, foolproof mechanisms. So there are many of them are guesstimates. We need to understand the frequency, the severity of the problem, of the magnitude of risk. So this is something which requires a lot of support from multiple areas, and most important from the government. This is point one. And then there are a lot of issues connected with insurance which are at the border level of ignorance. One is, even though there are insurance policies covering flood risk and flood, storm, tempest, inundation, everything, most of the people, they opt out of that. So the result that when something strikes, they're left without a cover. The second part is when it comes to private industry, including the ports, including the aerodromes, including large infrastructure power plants, people tend to they don't come out with the correct sum insured. There's a problem in assessing sum insured. So these things stand in the way of claim settlement. There are policies which are based on the exact sum insured and also on the reinstatement value. For the reinstatement value, for rebuilding it, the cost of premium is higher. So people opt for the normal policies. They don't really go in for the reinstatement value policies, with the effect that when they get compensated also, the compensation is not full. The third point in this is that most of the insurances are taken because there is a banker who recommends insurance. And the banker looks at his interest and not the insured person's interest. So here, the sum insured could be limited to the loan or whatever assessment the banker tells somebody to have. So it is not the real assessment. So when it comes to a claim settlement, there is huge underinsurance, and insurers are not going to pay for something they have not received premiums for. So this is another big gap which happens. Then again, there is the challenge of risk commensurate premium. Unless the risk is properly assessed, insurers won't be able to charge real correct premiums. Of course, the last point would be about depreciation. When it comes to factories and heavy equipment, people don't really understand that they have already used the equipment for 1 year, 2 years, 3 years, and they have earned the benefit out of that. So So when an insurance company settles the premium, settles the claim, so they would give a discount for the, for the depreciation, for that part of the machine which has been already enjoyed by the, for which the service has already been enjoyed. And the question of ensuring the infrastructure is taking a slice of the government's responsibility. When it is done, it is rather too huge for an insurance company to take it the way they jump at a government scheme like a Suraksha Bima which has happened. There is a personal accident policy or a life insurance. It is not as simple as that. Here it could be a huge risk, something like a Kerala flood, which we were looking at. So in that kind of situation, these NatCat events are insurable only because they are reinsurable. That is, the risk is transferred to a bigger pool, and the biggest pool which is around the world. So the reinsurers do work on it. So you need to have a lot of precision about the whole thing. There's a lot of hard work to be done by the insurers as well as by the government to make it all possible. And because we have already seen, just winding up, because we have already seen it happening in this country, the PM schemes are something which has created history for the country. If there could be, because government is sponsoring this this seminar, if there could be a PM scheme for NatCat insurance, possibly it could change the way insurance is done in this country. Thank you very much.
Okay, to save time, I'll just turn around. I won't walk anywhere. I'd like to link together the discussion that we've had with this panel with a theme that's been throughout the day, which is about systems thinking. Focusing on the individual asset, there's not enough money, and there are serious trade-offs in terms of the level of resilience you achieve is also how much is this thing going to cost. Taking a systems view can bring in new funding sources and can also improve the economics of the project as a whole. For example, in Copenhagen, faced with surface flooding risks, the obvious thing to do is just to build bigger drainage pipes. The NPV of that was something like minus 500 million euros. So instead, they combined green measures, property measures, and some grey infrastructure, and the net benefits of that were like 400 million, positive 400 million euros. I think we as a community have a real potential here to think about how do we create the viable business models with the private sector, with the public sector, to take these kind of systems approaches and bring them to scale. Thank you.
Yeah, I'm from the reinsurance industry, so one last pitch for insurance. First, I'd like to commend Rowan for trying to make insurance fashionable. It's usually not the case. And I'll just take 3 minutes to make 3 points. First is, I think taking the airport example, insurance is one financing tool which sends very important price and market signals. And it goes back to what Professor Patnaik referred also in terms of the risk reflective premiums. It tells you exactly why an airport, taking the airport example of Rowan again, in the Himalayan region carries a risk premium which is 5 times that of one in the plains. And the reason I'm saying this is because as a financial steering and decision-making tool, it ought to come back to the drawing board when you're looking at risk and financing aspects of projects before actually executing projects and infrastructure. It's not there as yet, but I think it is all part of you getting invited to the blended finance parties. I hope more of them come your way. Second point, if we just look back at the example of Kerala and going back the same thing, going back on the same reasoning, could insurance have been an alternative to somehow mitigate the financing burden that was faced by the central and state governments? We ended up with the state pleading for and the center imposing a calamity cess of 1% on GST for a period of 2 years. While the intentions are good, I think we all recognize that this kind of puts some stress on the whole GST structure. It also sets a bad precedent. Tomorrow, Maharashtra could be under drought financing strain, and they might put a claim on putting something on the GST structure as well. So a taxation, I would say, I would submit, is not an optimal way of financing any disaster-related financing. So again, case for insurance in some way, it's not the be-all of your financing challenges, but one component that could go to mitigating the finance burden. The final point I would like to just cite is a very interesting kind of project that we have taken up in the US. So Swiss Re has teamed up with city authorities of a prominent US city which has been prone to flooding. And the third partner in this partnership is one of the global infrastructure services majors. And we are looking at a parametric flood insurance for that city. Now, when we discussed the problem with the cities, the mayor said, see, the problem is not me getting financing. The problem is what will I use with the fund when I have 6 feet of water in my city? And we looked into the problem, and I think as with most cities and public authorities, the issue is once disaster strikes, how do you mobilize the equipment? How do you get finance to deal with actually addressing the immediate relief and rehab needs? So this three-way partnership, what it has done is there is a pre-agreed kind of a rate contract for the infrastructure services company to receive a predetermined amount of fund based on a certain level of flood that comes into the city, so that as and when the flood level is triggered or the flood payout is triggered, the money gets deposited in an escrow account, it gets available to the infrastructure services company to immediately commence with the rebuilding works. It's a very interesting example. We have not concluded the deal. We are still far from it. There are challenges. But I think I just wanted to cite this to sort of, again, try to raise insurance to the sort of discussion agenda and to see how it can basically address a lot of societal challenges that we have. Thank you.
Just can you conclude in 2 minutes, because we have to conclude
Okay,
very
I'll take 10 minutes. Thank you. So, good afternoon, everybody. So I'm the last speaker before your drinks and refreshment. So I'll try to make it quick or long, depending on the topic. I'm Sabeen Basnet from the Green Climate Fund. I'm a mitigation person. So why am I here? Because I basically lead our sector on energy efficiency and transport. And apparently, we're seeing that there's a lot of resilience infrastructure that needs to be built into our transport projects. So it was a good opportunity to be here, to be with you people. So what I would like to say, I think one of the things I want to stress is, first is on the Green Climate Fund, is we are a climate fund that's part of the Paris Agreement set up by the UNFCCC to actually finance climate mitigation as well as adaptation, and to actually, and our main intention is to provide transformative financing and provide risk financing. So this kind of goes back to what Aniket was saying, it's like there is capital out there, but is there capital fit for purpose? And that's where we want to try to be in is try to work with different projects, with multilateral banks, with different project entities on the ground in the country level to actually come up with that structure which can actually have that capital to actually mitigate the risk and to be that fit for purpose capital that can actually now catalyze more both public sector capital as well as private sector capital coming in. And also to kind of go back to the point that, again, you raised a lot of great points, sir. So, is what we want to do is we don't want to do pilots. I think the whole part you raised is experimentation, and we want to do experimentation at scale. Let's not, do a little component here and a little component here. Let's just do the big component. If it works, it works. If it doesn't work, we move on. We move on to something that's much more better, that has better longevity and more life. So that's one of the key things that we're doing. Just to give you an example, the last project that I did, and when we were building a transport route for a BRT system, and one of the ideas that came up was, there's a lot of flooding that happens. How about we just test out this little bit of a adaptation component on resilience on the road? So we said, okay, there's 4 areas which need this component built in. So just doing it on one makes no sense. Let us come in, we'll work with you to actually provide that concessional finance so that we can actually put the whole trunk network and build it as a resilient, road that goes forward. So I think that's one of the things that we do for us on the fund. So that's, I'm turning right up. So before I end, my last thing is I want to go back to the very first thing that Kamal mentioned in the morning, was to be bold. And that's what I would like to ask all of you also, is to be bold in your ideas. And think about the risky projects, think about things that can actually be scaled, that can be accelerated, can be blended, and then, and if no one wants to provide financing, we're there. Thank you.
I will just take 1 minute to conclude it. I think very rich and diverse discussion, difficult to sum it up in 1 minute. But I would say that I think the different perspectives that have come up actually really lay down the agenda for the CDRI. I think there is a strong case for innovation, experimentation, acceleration. And I think in the whole scheme of the things, public funds, insurance, global funds, all of them have a role. And at some level they interconnect and they reinforce each other. And I think this is one area which is opening up, which is offering new opportunities. And I think more the ideas, I think more we have a better risk management solutions. We have better, more effective instruments and services available with us. Thank you very much to all these speakers here, distinguished speakers, discussants, great discussion, and it was really a joy to be here. Thank you.
Thank you, everyone. That was all for the day. We will begin day 2 of this workshop at 9:30 a.m. tomorrow. I request all the chairs and moderators from various sessions today to be present for the first session tomorrow morning. Also, please join us for dinner tonight at Terrace Garden, Level P at 7:30 p.m. Thank you very much.